Welcome back to Investing Talk Podcast. Today we're tackling a question many of you might be asking about a specific company. Is Sibanye Stillwater a good time to buy now? We've gathered a wealth of sources from detailed investment analyses to technical data to really unpack what's going on with this company. Before we jump into the specifics, if you find this kind of detailed analysis helpful, please remember to subscribe, like, and maybe you'll leave us a comment. It really helps us bring you more of these. And if you'd like to support the show, hey, consider buying us a coffee. Also, if there's a specific company you'd like us to look into, make sure to leave a comment below after we get started.
That's right. Our mission today is, well, to cut through the noise, give you a clear, comprehensive picture of Sibanye Stillwater. We're using the latest data available up to July 2025. We'll be looking at everything from its core financials, valuation, market sentiment, and what might be coming next for this diverse mining giant.
That sounds like a plan. And to cut through that noise, we really have to start at the foundation. So what's the financial bedrock of Sibanye Stillwater looking like right now? Let's talk fundamentals. What are the numbers telling us about their current financial health?
Okay, fundamentals. Well, for its trailing 12 months, that's the most recent full year, we have data for Sibanye Stillwater reported revenue around $5.94 billion. The forecast suggests a slight annual growth rate from there, about 3.8%. However, here's where it gets, well, particularly interesting for you as an investor. The company is currently unprofitable, showing a net loss of about $386 million. That translates to a negative EPS of negative 0.14.
Negative EPS, okay. So losing money per share right now.
Exactly. But our sources do forecast a return to profitability within the next 3 years, and that's really a crucial point for understanding the whole investment case here.
So currently in the red, yeah, but there's this clear expectation of a turnaround. That's quite a projection. What about their profit margins and, overall cash flow? Especially if they're not profitable now, how are they managing day to day?
That's a critical question, absolutely. The company is facing significant margin pressure, which is precisely why we're seeing those net losses. Now, specific, explicit cash flow details weren't provided in the data we reviewed right now. And that's something you, as an investor, really need to be aware of, especially for an unprofitable company. That projected return to profitability, it has to translate into robust operational cash flow to be sustainable.
Right. Otherwise, it's just an accounting trick.
Pretty much. It's something you'd want to scrutinize very closely in their next earnings report. Healthy cash flow shows they can fund operations, growth, without just relying on, say, more debt or issuing new shares.
And speaking of funding debt, metals and mining companies, they're notoriously capital intensive, right?
Yeah.
Massive investments needed. What's the debt situation like for Sibanye Stillwater? Do we know?
That's a genuinely crucial point you're raising. And while our specific sources didn't detail the exact debt figures, it's pretty much an industry standard for mining companies to carry substantial debt loads, just because of those high capital expenditures you mentioned. So given their current losses, the ability to service that debt, pay the interest, could become a significant concern if profitability doesn't improve as expected.
So that adds another layer of risk to that turnaround story.
It does. High debt limits flexibility, makes them more vulnerable in downturns or if commodity prices slump. Definitely something to watch.
Okay, so beyond the raw numbers, where does Sibanye Stillwater actually stand in the broader industry? Does it possess any kind of competitive edge, something that sets it apart?
This is actually a key strength for them. It's where their story becomes, I think, more compelling. They are highly diversified across various metals. Think precious metals, gold, platinum group metals like palladium and rhodium, vital for catalytic converters. But they're also moving significantly into base metals, lithium, nickel, copper.
Battery metals.
It's exactly crucial for the clean energy transition. And they operate globally, too. Big presence in South Africa, the US, Europe, Australia. So this geographic and product diversity, it's a strong competitive advantage. Helps mitigate some of that inherent commodity price risk, If gold dips, maybe lithium is up.
Balances things out a bit.
Right. And that rising demand for metals like lithium and EVs is a potential long-term tailwind for them, assuming they execute well.
Okay, so we've got this diversified company, future profitability expected, but current losses, some unknowns on cash flow and debt. How does the market actually value it right now? Is it trading cheap, or is it priced for that perfect turnaround?
Well, what's fascinating here is because of that negative EPS we talked about, a standard PE ratio, price to earnings isn't really available, can't divide by a negative. However, the forward PE, which uses expected future earnings, is around 11.55. Now, the key insight for you here is that this suggests undervaluation, especially when you compare it to an industry average that's typically maybe 15 to 20.
So the market's looking ahead past the current losses.
It seems so. It's not valuing Sibanye on its current struggles, but on a pretty strong belief in that forecasted return to profitability. Makes it kind of a classic wait-and-see turnaround story, but priced at a discount right now.
That is a significant discount compared to its peers. Are there other valuation measures that back this up? Or maybe tell a different story?
Well, if we look at the market cap to revenue ratio, which can sort of act as a proxy for price to sales, or PS, that's approximately 1.1. Now, for the mining sector, PS ratios are often around 2 to 3. So again, that 1.1 indicates a relatively low valuation.
So the market's paying less for each dollar of their sales compared to competitors.
That's what it suggests, yes. And while our data didn't explicitly detail the price-to-book ratio for a precise comparison, it's common to see PB in the 1 to 3 range for mining. So the overall picture suggests the market is deeply discounting the stock based on its present challenges, but also anticipating significant improvement down the road.
That makes sense. The relative valuation metrics seem pretty clear, trading at a discount reflecting current losses, but also that investor expectation of future improvement. Okay, let's switch gears now. Let's talk about the actual price action. What are the charts telling us? What do the technical indicators say about Sibanye-Stillwater's immediate future?
Right. This is where it gets really interesting for investors who focus more on market movements, on timing. Current trading ranges for Sibanye-Stillwater are roughly $9.14 to $9.85, and it's hovering quite close to its 52-week high. That generally suggests some robust positive momentum, at least in the short term.
And the moving averages, they often give a pretty good sense of those short to midterm trends, don't they?
Absolutely. Moving averages are crucial for seeing the trend direction. The 50-day simple moving average that smooths out price over the last 50 trading days is currently around $7.12. And the longer-term 200-day SMA, looking back 200 days, is about $4.85. Now, the current price, trading between, say, $9.24 and $9.58, it's well above both of those key averages.
Which is usually seen as bullish.
Exactly. It's a classic bullish signal. Indicates strong short to midterm momentum and suggests an established upward trend, technically speaking.
What about momentum indicators like RSI, Relative Strength Index, or MACD? What do they suggest about buying or selling pressure right now?
Good question. The 14-day RSI is at about 43.3. That indicates a more neutral to perhaps slightly oversold condition. Basically, it means the stock hasn't seen extreme buying pressure recently that might signal it's overbought and due for a pullback. So no immediate red flags there. As for volatility, it's moderate, around 11.8%. That level can actually suit different types of investors, active traders looking for swings, but also maybe longer-term folks seeking reasonable stability.
Okay. And for people trying to pinpoint entry or maybe exit points, what are the key price levels to watch? Where's the support? Where's the resistance?
From a technical standpoint, the stock support looks pretty solid around the $7.50 to $8 range. That seems to be where buyers have consistently stepped in historically. Resistance, on the other hand, looks to be near $10 to $10.50. That zone acts as, well, both a psychological barrier, that $10 mark, and it's also a recent peak area where selling pressure tends to pick up.
So breaking above $10.50 so would be pretty significant technically.
It would, yes. A confirmed break above that resistance would be a strong bullish signal for the technicians.
Okay, so let's recap slightly. On one hand, the technicals look pretty good, seem bullish, the valuation seems appealing, suggesting a discount. But what's the overall sentiment like? What are the analysts saying? What's the general mood among investors? Is everyone as optimistic as the charts might suggest?
This is a really important question, and it's where we start to see some conflicting signals, which happens often in markets. Our sources indicate that professional analysts mostly hold a hold rating on Sibanye-Stillwater. That's cautious, right? Not outright bullish like buy. And the consensus price target among these analysts is approximately $4.73.
Wait, $4.73? That's way below the current price.
Exactly. It represents a roughly 49% downside from current levels, which is a stark contrast to that positive technical momentum we just discussed. Some price forecasts we reviewed even suggest a decline, or maybe just sideways action in the near term. So while the charts look good, the professional consensus is, frankly, pretty conservative, even bearish on price target.
Wow, that's quite a divergence. Really highlights the difference between technicals and maybe fundamental concerns. What about the broader market sentiment? Is the average investor feeling optimistic or cautious right now?
Well, current sentiment across the broader market, if you look at something like the Fear and Greed Index, is at 39. That reading generally indicates a tilt towards fear or uncertainty among investors, rather than outright greed or enthusiasm. So the backdrop isn't overly bullish. Our data didn't flag any major insider buying or selling alerts for Sibanye Stillwater recently that can sometimes be a strong signal, and we didn't have specific social media sentiment data, but that neutral to cautious analyst tone definitely implies, I think, subdued investor enthusiasm right now.
It's just maybe people are waiting on the sidelines, waiting for proof of that turnaround.
That seems likely, waiting to see those profitability numbers actually materialize before jumping in, despite the technical strength.
Okay, so we have this really fascinating mix, don't we? Optimistic technicals, attractive valuation, but set against cautious analyst sentiment, current real losses, and a general market leaning towards fear. So what are the big events or trends, the catalysts, that could really move the needle for Sibanye Stillwater, either up or down?
Yeah, catalysts are key here. The single most critical near-term catalyst is almost certainly their next earnings release. That's scheduled for September 11, 2025, according to our sources. This will be pivotal. It could provide that much-needed clarity on profitability trends we keep talking about. Seeing a clear path or even just a strong reduction in losses could significantly guide the price and maybe shift that analyst sentiment.
Makes sense. And given it's a mining company, I imagine commodity prices themselves are absolutely huge. How much does that swing things?
Oh, absolutely huge. Commodity prices are arguably the biggest external factor for them. Significant changes in precious metals, prices, gold, palladium, and those battery metals we mentioned, lithium, nickel, copper, will directly and significantly impact their revenue and, crucially, their profit margins. A sustained positive commodity cycle, driven by demand or maybe supply issues, that could be a major catalyst, helping them hit that profitability forecast much faster.
Right. If the tide lifts all boats in their sectors. If we connect this to the bigger picture, what macroeconomic factors should we as listeners be watching? Things that could act as external catalysts.
Okay, beyond just commodity prices themselves, you've got inflation, interest rates, overall global industrial demand. Those are key. For Sibanye-Stillwater specifically, the demand for metals used in EVs and clean energy infrastructure is particularly relevant. Watch trends there. Any major shifts, positive or negative, in those areas could be transformative for their outlook. Also, while nothing specific is announced right now, potential M&A in the mining sector or maybe significant expansions by Sibanye themselves into high-growth battery metals markets, those kinds of strategic moves could certainly favor longer-term growth if they were to happen.
Okay, we've thoroughly discussed the opportunities, the potential catalysts that could propel Sibanye-Stillwater forward. Now we have to talk about the downside. What are the significant risks an investor should be acutely aware of before considering putting money here?
Right, risks are crucial. On the stock-specific side, the number one concern has to be the current loss-making status and the inherent uncertainty of that projected turnaround actually happening. There's no guarantee, right? There's also that inherent exposure to commodity price volatility we mentioned. If prices dip significantly, their revenues, their margins suffer badly. And as we touched on earlier, there's always potential dilution risk or financing risk. If they need to raise capital through issuing more shares, that can hurt existing shareholders.
And for the mining sector as a whole, it's known for having its own unique set of challenges beyond just commodity prices.
Indeed. The mining sector is deeply subject to regulatory risks. Think changes in environmental policies, taxation, things like that. Environmental concerns and potential liabilities are also just ever-present realities for miners. And then there are labor disputes, particularly in South Africa, where Sibanye-Stillwater has significant operations. Those can lead to production stoppages, increased costs. It's a known risk factor there. Plus, as we said, metal prices depend heavily on global economic cycles. A global recession would likely hit demand hard.
Any broader macroeconomic risk that could affect not just the company, but maybe the entire investment thesis?
Absolutely. Currency fluctuations are a major one, especially between the South African rand and the US dollar, given their global footprint. Inflation can drive up their operational costs, squeezing margins even if revenues are okay. Global economic slowdowns, as I mentioned, directly impact demand for industrial metals. And shifts in international trade policies could also create headwinds. Oh, and one more thing on risk. While the average daily trading volume, over 11 million shares, suggests good liquidity, it's easy to buy and sell. That 11.8% volatility we noted earlier, it indicates the price can move sharply. That poses risks for traders and investors alike. Big swings can happen fast.
Okay, so pulling it all together now, what does this all mean for Sibanye-Stillwater? If we put all these pieces together, the fundamentals, the valuation, the technicals, sentiment, catalysts, risks, what's the overall picture you should be taking away from this analysis?
Well, our sources consolidate this into an overall rating of 5 out of 10, right down the middle. And the rationale is pretty balanced, reflecting everything we've discussed. The stock clearly shows potential, mainly due to its highly diversified commodity mix, especially that exposure to critical battery metals, plus that expected return to profitability. However, it faces significant near-term earnings risk because it is currently losing money. And there's that mixed, even cautious analyst sentiment with that very low consensus price target. So while the technicals support some short-term momentum, that fundamental uncertainty around actually achieving profitability weighs heavily on the rating. It really creates a mixed bag for you as an investor.
A true 5 out of 10 situation. So for you, our listener, what are the actionable takeaways here? If someone were considering an investment, what's maybe a good entry price range? And what kind of investment horizon does the stock seem best suited for based on all this?
Okay, actionable points. For long-term investors, people looking out several years, the recommendation from our sources is to consider entry near those strong support levels we identified, specifically around $7 to $58. That range potentially offers a greater margin of safety, given the current volatility and uncertainty. It builds in a bit of a cushion if that turnaround takes longer. Now, for shorter-term trades, the advice is maybe monitor pullbacks towards the 50-day moving average, that was around $7.10, or alternatively, look for confirmed breakouts above the $10 resistance for potential momentum plays, but know the risks there.
So despite those strong recent technicals, the analysis really suggests it's better suited for a long-term view, more of a patient play.
Yes, precisely. The analysis strongly suggests it leans towards being better suited for a long-term investment. That's mainly because the core thesis rests on that fundamental turnaround expected over the next 2 to 3 years, and its strategic exposure to those key commodities for the energy transition. Short-term trading is certainly possible given the volatility, but it definitely carries higher risk right now. That's due to the earnings uncertainty and that neutral to bearish near-term analyst view. It's really a conviction play on the future, more than a momentum play based on the present.
Got it. And just quickly, for those active traders who might still be looking at those short-term opportunities, any guidance on stop losses or take profits from the sources?
Yes, for short-term traders specifically, a stop loss of approximately 7 to 8% below the entry price is suggested, just standard risk management. For example, if you bought at $9, a stop loss around $8.25 would limit potential downside. For a take profit target on a short-term trade, the suggestion is to aim near that $10.50 to $11 resistance zone we talked about. That aligns with the technical picture.
Okay. What a comprehensive look at Sibanye Stillwater. It really is a fascinating case study, isn't it? A company with clear long-term potential in really crucial future-facing commodities. Yet at the same time, navigating these significant near-term financial hurdles and getting very mixed signals from the market and analysts.
Absolutely. It just highlights how vital it is to look at all these different dimensions, doesn't it? The fundamentals, the technicals, the sentiment, the catalyst, the risks. You can't just rely on one piece. Doing that can give you a very incomplete and potentially quite misleading picture of what's really going on.
So for you, our listener, the big question really remains, how do you balance that conviction you might have in a long-term turnaround story, especially in these critical metals, with the reality of the near-term risks, the current losses, and the cautious sentiment we see in today's market? Definitely something to consider as you apply these frameworks to your own research. Thank you for joining us on Investing Talk Podcast. We'll be back soon with another in-depth look at the market.